Ever felt like everyone's speaking a secret language when they talk about credit? Credit scores, interest rates, APRA. It can feel like a confusing maze designed to trick you. If you've ever nodded along pretending to understand, you're not alone. You might wonder, what even asterisk is asterisk credit? Why does it matter? And how do you get started without making a huge mistake? Today we're cutting through all the noise to make credit crystal clear. In just the next 60 seconds, we're going to demystify credit for you, simplifying everything you need to know as an absolute beginner. No jargon, no complicated math, just the honest basics. Get ready to understand what credit actually is, why your credit score is like a financial report card, and the easy steps you can take to build good credit right now. Let's unravel this mystery together. So what exactly asterisk is asterisk credit? At its core, credit is just borrowing money with a promise to pay it back later. Think of it as a financial handshake, where trust is exchanged for a temporary loan. It's really that simple. Imagine your friend lends you $20 for lunch because you forgot your wallet. You both understand that you'll pay them back tomorrow when you get home. That's credit in action. You're getting something now, lunch based on your word, to return the money later. Credit in the financial world works exactly the same way, just usually with banks or companies instead of friends. Whether it's a small $20 for food or thousands for a car, the principle remains. You get funds now and you commit to returning them, often with a little extra called interest over an agreed period. Now let's talk about your credit score. Think of it like your financial report card. It's just a number, usually between 300 and 850, that tells lenders how good you are at paying back borrowed money. Just like a good grade on a school report card shows you're a reliable student, a high credit score shows you're a reliable borrower. It's essentially your trustworthiness rating in the money world. The higher your score, the more financially trustworthy you appear. This makes it easier for you to get approved for loans, credit cards, or even renting an apartment, often with better terms. A low score, on the other hand, can make it much harder to borrow money or might lead to higher interest rates when you do. So building a good score is super important. So why does this report card actually matter? A good credit score isn't just a pat on the back, it's like having a golden ticket to better financial opportunities. It saves you real money and opens doors. Imagine you need a car. With a strong credit score, a bank might offer you a loan at just 5% interest. This means lower monthly payments and you save thousands of dollars over the life of that loan. But if your credit score is poor, that same bank might offer you a loan at 15% interest or even deny you altogether. The difference in interest can add up to huge amounts, making things far more expensive. A low score can also impact renting an apartment, getting a cell phone contract, or even some job applications. It truly is your financial reputation influencing how much trust lenders and others place in you. So, how do you even start building credit safely? The best way is to begin small and responsibly. Think of it like learning to ride a bike with training wheels. Low risk, high reward. Don't jump into big loans right away. Consider a secured credit card or a store card for a small, recurring purchase you can easily afford. For instance, use it for your streaming service subscription or a small gas fill-up. The key is to pick something you already pay for. The absolute golden rule: pay the full balance every single month. This avoids all interest charges and proves you're a reliable borrower. Even if it's just $20, paying it off completely shows responsibility and builds your score. Treat your first credit card like a debit card. Only spend what you have in your bank account. This disciplined approach sets you up for long-term financial success and helps you avoid getting trapped in debt from the very beginning. So let's quickly recap what we've learned today. Credit is simply borrowing money with a promise to pay it back. Your credit score is just a number that tells lenders how good you are at keeping that promise. A higher score means you're more trustworthy in the eyes of banks, opening doors to better loans and saving you money. Remember, it's not about how much you borrow, but how reliably you repay it. Your credit journey doesn't have to be intimidating. Start small and smart. Try this, pick just one small bill you have this week, maybe a streaming service or a small subscription, and make sure you pay it on time, that's your very first step towards building a solid financial future. If you found this helpful and want more simple money tips that just make sense, hit that subscribe button. We're here to make money easy.